Bitcoin is moving up again, and I know what a lot of people are thinking right now. Is this it? Is the worst already behind us? Is this the kind of bounce that catches everyone off guard and drags the whole market back into full bull mode? Maybe. But maybe not, because this is exactly where people usually get trapped. Not at the bottom, when fear is obvious. Not at the top, when greed is obvious. But in the middle, when price is rising just enough to make the pain fade, just enough to make people feel smart again, and just enough to make a weak rally look stronger than it really is. So let's slow this down properly. This is not a celebration video, and it is not a doom video either. This is a structure video, a regime video, a risk video. Because Bitcoin can move higher from here and still not prove that a real bullish trend is back. Those two things can both be true at the same time. And before we go deeper, one quick thing. YouTube shows me all the time that many people watch these videos regularly but still never subscribe. So if you genuinely get value here, support the channel, subscribe, and leave a comment, even if it's just a simple "Our John AG," because that tiny action helps more than most people realize. Now here's the first thing you need to understand. Price is up, yes, but the market has not earned the right yet to call this a clean recovery. As of today, Bitcoin is around 71.3 CAD dollars, with an intraday range roughly between 70.5 CAD dollars and 72.7 CAD dollars. That means price is still below the key resistance area around $74,460 that matters in this whole setup. It also means the market is still trading well below the short-term holder cost basis that Glassnode currently places near 81.6 CAD dollars, and that matters more than most people think. Because if you strip away the noise, that is the real issue. The market is bouncing, but it is bouncing under pressure. It is bouncing below a major overhead line where recent buyers, on average, are still underwater. And when a market is trading under the average cost of its more reactive holders, you do not assume strength first. You assume caution first. You assume resistance first. You assume that every push higher still has to prove itself. That does not mean Bitcoin must crash tomorrow. That does not mean the bounce is fake. And that does not mean upside is over. But it does mean you should stop confusing price is green with the trend has healed. Those are not the same thing, not even close. In fact, if anything, this is the kind of move that creates the most confusion. Because a corrective bounce can look exciting. It can run hard for a while. It can recover levels that make people feel safe again. It can drag in late buyers. It can squeeze shorts. It can light up social media. And still, structurally, it can remain just that, a corrective bounce. That is the core idea here. The rise can continue, and the bigger read can still stay cautious. Now let's talk about why. When a market is truly turning bullish again, you usually see something cleaner than this. You see stronger follow-through. You see reclaim after reclaim. You see resistance get taken out with conviction. You see dips bought faster. You see momentum stop hesitating. You see the market act like it wants higher prices, not like it has to negotiate every single step. This move does not feel like that. This move feels like it is arguing with itself. Every time Bitcoin starts leaning up, there is another patch of supply above it. Another reason for hesitation. Another area where traders who got trapped earlier may decide to lighten up. Another point where the market has to prove it deserves to keep going. That is why the move higher can still happen while still feeling heavy. A lot of people misunderstand that. They think if price is rising, then the bearish idea must already be dead. No. A weak market can rally. A bear phase can bounce. A corrective structure can move higher than people expect. And sometimes the move gets more dangerous precisely because it looks just convincing enough to make people drop their guard too early. That is what makes this market tricky. Not because the chart is impossible to read, but because the chart is easy to misread when emotions get involved. Now let's bring in the short-term holder side of this, because this is where the story gets a lot clearer. On-chain data is useful when it helps you see behavior, not when it becomes a fancy way to decorate an opinion. And one of the cleanest behavior gauges right now is the short-term holder cost basis. Glassnode's latest work says Bitcoin still remains below that level, which sits around $81.6 thousand. And they specifically say that a proper reclaim of that area would be one of the most credible confirmations that the current bear phase is shifting toward a more constructive recovery. That is not a small detail. That is a regime clue. Why? Because short-term holders are usually the least patient part of the market. They are not the people who have sat through years of volatility. They are not the people who can watch a 20% drawdown and shrug. They are the newer buyers, the recent buyers, the people whose conviction is often tied to whether they are green or red. When they are above water, they tend to calm down. When they are underwater, they become supply. That is human behavior. Simple, brutal, repeating. So if Bitcoin is still below where that group on average bought in, then this market is still dealing with overhead stress, which means rallies can run into people who simply want out at a better price. And that is one reason why these recoveries can look decent on the surface while staying fragile underneath. Now step back and think about what that means in plain language. It means the market is climbing while carrying people who still want to sell into relief. That is not impossible, but it is not ideal either. And when a market rises with that kind of baggage, you do not just stare at the candles. You watch how it behaves near pressure points. You watch whether the move accelerates or stalls. You watch whether it reclaims key levels and stays there, or tags them and fades again. That brings us to the key map. On the support side, the shorter-term area that matters in this framework sits roughly between $68,257 and $69,920. Beneath that, the bigger support zone remains around $61,560 to $64,590. And overhead, the major level everybody should care about in this near-term picture, is still around $74,460. If price can break that area with real force, then the conversation can start shifting toward the $80,000 region. But until that break actually happens, resistance is not just a theory. It is still active. It is still relevant. It is still in charge of the test. That is important because a lot of traders are acting as if resistance has already been defeated simply because price is moving in its direction. That is not how markets work. Moving toward resistance is not the same as breaking resistance. Touching a ceiling is not the same as removing the ceiling. And getting close to a level that matters is often exactly where weak rallies run out of breath. So yes, bulls still have room, but they also still have work to do. Now I want to deal with one of the biggest mistakes people make in this phase. They think the job is to predict every tiny turn. It is not. The job is to understand the quality of the move. That is the real game, because a market can be choppy and still healthy, and a market can be green and still weak. That is why just saying Bitcoin is up tells you almost nothing by itself. You have to ask what kind of up this is. Is it aggressive? Is it impulsive? Is it clean? Is it reclaiming the right levels? Is it rising with improving conviction? Or is it drifting higher through resistance while still carrying a larger corrective feel? Right now, it still looks much more like the second one. And that is where a lot of people get uncomfortable because they want a simple answer. Bullish or bearish, moon or doom, breakout or collapse. But markets are rarely that generous. Sometimes the more accurate answer is this. Upside is still possible, but the move still looks like a bounce inside weakness. And that is exactly what this looks like right now. Now add the broader backdrop, because the rally has not happened in a vacuum. Reuters reported that risk assets got a lift after a temporary US-Iran ceasefire boosted optimism across markets, while at the same time warning that the truce still looks fragile. Reuters also noted that traders were again pricing roughly a 50% chance of a Federal Reserve rate cut by year-end after oil dropped and the dollar weakened. That matters because Bitcoin has been trading like a risk asset for a while now, so when macro pressure eases even a little, it can fuel a rebound. But a macro relief bounce is not the same thing as structural healing. That distinction matters a lot. Because if part of this move is being supported by temporary relief, then the quality of the follow-through matters even more. Relief can lift price, but relief alone does not build a new trend. To build a new trend, the market has to absorb supply. It has to reclaim important zones. It has to stop acting fragile every time the headlines wobble. And we are not there yet. Not based on the levels, not based on the cost basis, and not based on how this rally still feels. Now here's where I think people should really pay attention. There is a scenario where Bitcoin does push a bit higher from here. Maybe it squeezes further. Maybe it takes another shot at that 74.4 region. Maybe it even pokes beyond it for a while. I am not ruling that out at all. In fact, if you are being honest, there is still room for that in this structure. But even that would not automatically settle the case. Because if the market is still below roughly 81.6, then the bigger on-chain pressure line has still not been reclaimed. And if the market has not convincingly shifted above that area, then the argument for a full trend repair is still incomplete. In other words, even a stronger bounce here could still end up being just that, a stronger bounce. That is why getting too excited too early can be expensive. The market loves to reward patience late and punish impatience early. And one more thing here. If some of you watching are actually doing well in this market, or in your work, or in life generally, share that in the comments once in a while. Seriously, real people read those comments, and sometimes one honest success story can lift someone else more than you think. Now let's talk about another piece a lot of people are missing. Demand is improving, but it is still not screaming. Glassnode said this week that US spot ETF flows have started to improve, with the 14-day average flipping back into modest net inflows after a long stretch of outflows. They also said the shift is still small in magnitude, which is the key phrase there. Small, but directionally better. That is constructive. But constructive is not the same as fully convincing. And if you want to see how uneven that demand still is, Look at the recent daily ETF flow picture. Farside's data shows U.S. spot Bitcoin ETFs pulled in about $471.4 million on April 6th, then flipped to roughly $159.1 million in net outflows the very next day. That is not the profile of a market where conviction is already clean and one-sided. That is the profile of a market where participation is coming back in patches, not in a straight line. That is why this bounce still feels unstable. There are signs of life. There are signs of demand. There are signs that some of the panic has cooled. But there is not yet enough evidence to pretend that the market has moved into an easy, clean, low-risk, bullish environment. It is not. And this is exactly why I keep coming back to the same point. Do not confuse improvement with confirmation. Improvement is step one. Confirmation is later. Improvement says the market stopped bleeding as badly. Confirmation says the market actually repaired itself. Improvement says traders are willing to nibble. Confirmation says the market reclaimed control. Those are very different stages, and right now, Bitcoin still looks much closer to the first than the second. Now let's zoom in on the structure in the simplest possible way. There are basically two near-term paths that make sense here. The first is the cleaner one for bulls. Bitcoin holds the higher short-term support band around 68.3 to 69.9K, keeps leaning up, and makes another proper run toward that 74.4 resistance. If that break comes with force and follow-through, then attention naturally shifts toward the next area near 80K. The second path is messier. The upper support gives way, price drops back, but the larger support zone between roughly 61.6 and 64.6 still holds. If buyers step in there again, the market can still produce another push higher afterward. That would keep the bounce idea alive, but it would also reinforce the point that this whole move is still corrective, still uneven, and still not acting like a clean trend recovery. Both paths matter, because both paths still allow upside, but neither path by itself proves the bigger bullish case yet. That is the subtlety here. And subtlety is where most traders lose patience. They want the market to tell them everything immediately. It rarely does. Now, I also want to say something that is unpopular when people are excited. The market does not owe anyone a perfect bounce. It does not owe anyone a textbook recovery. It does not owe anyone the ideal rally shape that makes every chart look beautiful. Sometimes a corrective move stretches less than expected. Sometimes it drags sideways. Sometimes it rises in a way that feels unsatisfying. Sometimes it gets pushed around by headlines, rates, positioning, and fear. That does not automatically invalidate the idea that more upside can happen. It just tells you the route higher is full of friction. And right now, friction is everywhere. You can feel it in the macro backdrop, you can feel it in the on-chain regime, you can feel it in the ETF picture, and you can definitely feel it in the fact that Bitcoin is still under the level that would make recent holders breathe easier. Now here's the part that usually gets ignored until later. Bear phases are not recognized early by the majority. They are recognized late, usually much later. Usually after enough pain has happened that people can no longer deny what the structure was telling them earlier. This is one reason relief rallies are so dangerous, because they create emotional amnesia. They make people forget what regime they are in. They make people think the last few painful months were just noise. They make traders suddenly talk like the market is healthy again before it has actually shown that health on the chart. And sometimes that is exactly when the trap gets laid. Look back at how markets behave after major breaks. The first decent bounce often feels better than it deserves to feel. It creates hope. It repairs sentiment faster than it repairs structure. And if you do not know the difference, that is where you can make bad decisions with full confidence. That is why I keep using the phrase regime, because regime tells you what kind of market you are standing in. And if the regime is still weak, then rallies should be treated with more respect and less blind trust. Now, none of this means the market has already printed its final bounce high. That is another point worth slowing down for. There is still no clear reason to pretend the near-term upside is fully over. In a structure like this, you usually want stronger evidence before declaring that the rally is finished. And that is one more reason why simply seeing a dip is not enough. The market can still dip, reset, and push once more. It can still print another higher low and take another shot upward before the larger pressure returns. That is why chasing every small red candle as the top can be just as sloppy as calling every green candle the breakout. Both are lazy. The better approach is to watch the path. Watch whether downside becomes sharp and decisive. Watch whether support zones start giving way in sequence. Watch whether the market loses the ability to defend the higher range. Because if those support levels break cleanly, then the case for renewed weakness gets stronger again very quickly. But until then, the bounce can keep breathing. So if you ask me the honest question, can Bitcoin still go higher in the short term? The answer is yes. If you ask the more important question, does this already look like a strong new bull trend? The answer is still no. And those two answers are not contradictory. They are the whole point. Now let me make this even simpler. If Bitcoin cannot get through roughly 74K, then the market is still proving that sellers are active where they should be active in a weak structure. If Bitcoin does break that level, then the next upside area comes into focus near 80K. But even if it gets there, the more meaningful line is still higher, near the short-term holder cost basis around 81.6K. That is why the market still has multiple ceilings above it, not just one. And a market with multiple ceilings above it is not the same thing as a market in clear air. That is the problem with getting overexcited here. People see one target. The market still sees layers, and layers matter. Now, I also want to address something that keeps showing up every time Bitcoin bounces. The idea that if price is recovering, then all of the bearish thinking must have been wrong from the beginning. That is not how market analysis works. A cautious thesis is not invalidated just because price rallies inside it. In fact, if the thesis already allowed for a bounce, then the bounce is part of the thesis, not a rejection of it. This is why context matters so much. A corrective rally is not a surprise inside a weak regime. It is normal. It is expected. It is often necessary. Markets do not go down in a straight line forever. They shake people out on the way down, and they also shake people in on the way back up. Both sides get tested. Both sides get punished when they get lazy. That is what makes this phase so dangerous for anyone trading from emotion. Now let's look at the mood of the market another way. Reuters reported in early February that Bitcoin's slide had become severe enough to wipe about $2 trillion from total crypto market value since the October peak, with U.S. spot Bitcoin ETFs seeing more than $3 billion in January outflows, according to Deutsche Bank analysts cited there. Then Reuters reported a sharp rebound back above $70,000 as risk assets stabilized, while also noting that traders were still leaning hard toward downside protection in options. That combination tells you something important. Fear cooled. But confidence did not fully return, and that is exactly the type of backdrop where sharp but incomplete rallies can happen. Enough relief to bounce, not enough trust to confirm. Enough buying to squeeze, not enough conviction to clear the whole board. That is why the phrase, "this rally might not hold," is not fear-mongering. It is just the cleanest way to describe a market that still has unfinished business overhead. Now, by the time you are watching this, the members-only video should already be live. If you want the full stack of updates in one place instead of scattered bits and pieces, join the membership and watch the deeper breakdown there. Premium members will continue getting the more in-depth analysis as it develops, and that also tells me who is really following this market closely with us. And yes, if you are not already in the WhatsApp channel, join that too, because fast updates often matter most when the market starts moving before the next full video drops. Now back to the chart, because this next part matters a lot. One of the clearest warning signs in a weak environment is when price rises, but the character of the rise remains defensive. And what do I mean by defensive? I mean the move up looks like it is surviving, not leading. It looks like it is pushing through traffic, not breaking into open road. It looks like every advance needs permission. That is not what strong trend reversals usually feel like. Strong reversals usually make people uncomfortable for a different reason. They do not just bounce. They dislocate. They leave people behind. They force fast repricing. They do not keep asking the same resistance levels for permission over and over again. That is why the route matters as much as the destination. If Bitcoin reaches higher levels through a slow, choppy, hesitation-heavy path, that says something. It says supply is still around. It says the market is still negotiating. It says the move is still vulnerable to rejection. And if the move is still vulnerable to rejection, then you have to treat it with discipline, not excitement. This is also where common people get hurt the most, by the way. Not because they are not intelligent, but because they are busy. They do not have time to stare at the chart all day. So they look up, see price green, hear louder bullish voices, and assume the hardest part must be over. Sometimes that works. Sometimes it does not. But if the structure underneath is still unresolved, then the risk of buying emotion instead of confirmation remains very real. So what would start to change the picture more clearly? Simple. A strong break above the key resistance zone, then real acceptance above it, then continued progress toward the short-term holder cost basis, and most importantly, a reclaim that does not immediately fall apart. That would matter. That would not guarantee a straight path up, but it would matter, because at that point the market would finally be doing more than bouncing. It would be rebuilding credibility. And credibility is what this rally still lacks. Not movement, not volatility, not excitement. Credibility. That is the missing ingredient. Now, before I close this out, I want to give you the cleanest practical read I can. If you are bullish short-term, your market still has a path. Bitcoin can keep pushing. It can hold the higher support band and run at resistance again. If that door opens, the next focus becomes the area around $80,000. That is a real possibility. But if you are acting as if the market already proved a brand new bullish trend, then you are moving too fast. Because price is still below the major pressure lines. Because the more reactive holders are still underwater on average. Because ETF demand is improving, but still only modestly. Because macro relief can fade. And because this rally, even now, still carries the feel of a move that is correcting damage rather than erasing it. That is the difference. And one last friendly thing. If any of you have built something meaningful, turned a bad phase around, made money with discipline, or simply improved your life in a real way, share a bit of that in the comments. It helps more people hear than you think. Sometimes the smartest thing in a comment section is not a prediction. It is proof that patience can still pay. So here's the bottom line. Bitcoin is rising. The bounce is real. The upside is not dead. But the market has still not delivered the cleaner evidence that would make this feel like a fully repaired bull structure. It is still below the major near-term resistance. It is still below the short-term holder cost basis. It is still trading in a way that feels more corrective than impulsive. And until that changes, the smarter posture is not blind fear and it is not blind excitement. It is disciplined suspicion. If the market proves more, you can respect more. If it fails at the same pressure points again, then this entire rebound starts looking exactly like what it may be, a temporary rally inside a still fragile market. That is why the next reactions around support and resistance matter more than the last few green candles. That is why this move can still stretch while still staying dangerous. And that is why this rally might not hold. And there is one more reason I do not want people getting careless here. Markets near important turning zones often become the most persuasive right before they become the most punishing. They pull in the people who waited. They tempt the people who were cautious. They make everyone feel late at the same time. And that emotional pressure can be stronger than the chart itself. People start buying not because the market confirmed enough, but because they are scared of missing what might come next. That fear of missing out is powerful, but it is not analysis. And in this kind of structure, fear of missing out can make a weak setup feel stronger than it is. The market does not need you to feel convinced. It only needs you to act early. That is why patience matters so much right here. Also remember this. Some of the biggest moves in fragile conditions are not built on broad confidence. They are built on short covering, temporary relief, lighter selling, and the simple fact that price can travel a long way before it actually proves anything. That is another reason why a rally can look dramatic without being durable. Price can move fast. Strength takes longer to verify. So do not just ask how far Bitcoin can go. Ask what kind of buying is carrying it there. Ask what levels are actually getting reclaimed. Ask whether the market is building a base or just bouncing through open space before the next decision point arrives. Because if the answer is still, we are bouncing, but under resistance, under the short-term holder line, and with only tentative demand returning, then the risk has not disappeared. It has only changed shape. And changed shape risk is often the most dangerous kind, because people stop respecting it. So stay sharp here, not emotional, not reckless, not frozen, sharp. The opportunity is still there. The danger is still there. And until Bitcoin proves that this move is more than a relief rally, both of those truths remain on the table at the same time. If you want the rapid alerts, get into the WhatsApp channel. If you want the deeper version, the members-only update is already there waiting for you. And if you want to support the channel in the simplest way possible, subscribe right now and leave a comment below, even a short one, because that tells the algorithm this content deserves to move further. Now watch the levels, watch the behavior, and watch whether Bitcoin is actually reclaiming the market or simply borrowing time inside a bounce.